Hi guys, I know things are not easy at the moment in our world with all the stress around affordability, buying power's dropped, rental costs going through the roof and interest rates. So if you're struggling with cash flow and you do have your own home, there's some things you can go and look into and investigate that may be able to help you. Now, most of you that own property, if you own your own home, your values would have definitely increased in the last 3 to 5 years, and substantially for some of you as well. So you've got equity there. Now, when I started this journey, I didn't even know what equity was, but equity is just purely the difference between the debt on your property and the value of what it is today. So if you've got a house worth $800,000 and your mortgage is $400,000, you've got equity of $400,000. Now, can you go and get all that equity out and utilize it? Well, there's steps to do that. You can't get it all out because you're dealing with the banks. They're releasing funding and you're using your house as security, just like they used your house as security to give you your initial mortgage to buy the property. Now, what they will do is release equity up to 80 or 90% of the value of the property. So if it's $800,000, you've got $400,000 debt. At 80%, you'd be able to go up to $600,000, and you have $200,000 of equity then available. Now, that $200,000 of equity could be used to buy an investment property. It could be used to start a business. It could be used a portion of as a buffer. It can also be utilized to basically do a debt consolidation if you've got a lot of high interest rate consumer debt like credit cards and personal loans. So you can consolidate that in as well. So there's multiple options. But the thing is, you have to be able to manage your income, because they look at your expenses and what you're spending money on, your living expenses and your income, to determine whether you've got enough income to actually have that release. So just like when you go and apply for a credit card, you've got to show them a certain amount of your income and your expenses. Imagine this is like a big credit card, but you don't use it like a credit card. You use it, ideally you use it in a way to increase your cash flow and grow assets and have tax deductibility with that money. You don't go and spend it on a jet ski, a hotel, a holiday, those type of things. Now you could, but then it's just going to add on top of your existing mortgage and put you in a worse position. Anyway, equity is a really important thing to understand. If you want to improve cash flow, there's some really simple things you can do. If you've got any questions, shoot me a DM, guys. It's a really powerful thing to be able to do, getting on top of finance and taking control of your debt. It makes a big difference. Ciao.